Wanted to take a look at Williams Sonoma WSM stock. I've certainly heard of Williams Sonoma. I've been following the company here and there. They pop up in my feed from time to time. But one thing that really surprised me, actually two things, was number one, it is significantly undervalued when you compare it to a lot of other stocks. Number two, I did a video on XHB stock, which is the Homebuilders ETF. Williams Sonoma WSM stock, the number one holding for the Homebuilders ETF. Did not see that coming. Williams Sonoma, of course, owns, they're merged up with Pottery Barn. There's a couple other smaller companies, but we know it as kitchen items. But this is a subcategory inside the concept of home builders. Because of that, it popped up as number one in the holdings for XHB stock. I wanted to break it down because the value here in WSM stock, it's a bit high. Let's jump in and I'll show you why this is a buy. If you are just joining me for the first time, thanks so much. This is my second channel. I broke it away from my original channel where I focus on cannabis stocks, which those are starting to light up because legalization. This channel here deals with economics and how that applies to the stock market. I break down the stock market, the bits and pieces, stock market analysis, plus individual stocks. Again, I looked at XHB, the Home Builder ETF yesterday, and Williams Sonoma WSM stock is the number one holding. And as you can see, they just released earnings, and the WSM stock shot up significantly. This is the 4-hour bar chart for WSM stock. There's still a lot of juice left in this tank as far as I'm concerned. But the thing is, you could play woulda, shoulda, coulda all day long. WSM stock was significantly lower. The yield you would have returned from owning this looking forward is high. There's still, again, a lot of juice left in the tank. Let's break down the numbers real quick. Quarterly revenue, you'll see Q4 quarterly revenue, of course, is going to be much higher because that is the season of shopping for retailers. And so you'll see some kind of variations with the quarterly revenue there. Nonetheless, breaking things down, projected revenue, 2024, $7.71 billion, which is a small decline from 2023. This may be why WSM stock has moved lower like it did. 2025, not expecting that much more. But let's talk about that for just a second. I don't even know that they're probably going to hit these numbers. Things are going to get interesting. And you first must ask the question, how is the economy? Every single stock operates inside an economy. We're starting to see a small contraction in the economy. First thing we're noticing is unemployment numbers are starting to edge up a little bit higher. How far will that go? The first rule of thumb I always operated on is whenever the Federal Reserve does anything, they never get it right. And that's both a chide and it's also a reality. When they make a move in interest rates, it takes a moment for that to work into the economy. We don't know if the Federal Reserve has gone too far or not far enough. We won't probably know that for another 6, 9, 12 months as these remaining interest rates that they just pushed through get inside the economy and have their effect. So it's possible, and this is the thesis that I'm kind of working on for the 2024 stock market analysis and projection, is that I believe the economy will sputter a little bit and then kind of get going again. Most people will see that as good news. The problem with that is twofold. First, inflation will not come down the way the Federal Reserve is looking. So the Federal Reserve will have to step back in and push interest rates a little bit higher. Sure, we're probably going to see the stock market elevate a little bit more. Don't get too married to those profits because the Federal Reserve will have to work harder. And that means stock valuations are probably going to fall more. I also believe that if you follow M2 money supply, you can see that we're well above trend line and that the Federal Reserve needs to kind of keep the economy sideways. So how does that affect a retailer? Well, retailers are direct to consumers, which this economy is 70% service related. Retail would be a big part of that. So if the Federal Reserve towards the end of next year starts having to raise interest rates, and it will be interesting simply because this is an election year coming up. I'm not sure how they will handle that. But should the Federal Reserve have to do that, consumers will contract even further. We're starting to see these results right now, but I don't believe inflation will hit 2%. That's the key thing. I expect it kind of maybe 2.75. Just sit there and nag the Fed for a minute. Williams-Sonoma, Pottery Barn, a few other companies, retailers across the board are probably going to not see their projected revenues. Moving forward, gross margins 44.36%. It's a bit higher than the average. Operating margin 17.08%. And then finally, net margins at 12.8%. The S&P 500 for Q3 has printed something like 10.25%. So Williams-Sonoma, from a net margins perspective, is outperforming the broader stock market. But they don't have revenue gains. That's sort of the hesitance that I have, which, should WSM stock fall somewhat, is an opportunity, if you're patient enough to wait for that fall, to get in. Earnings per share. We're seeing some earnings per share kind of continue to increase again. Q4 will probably outperform the rest. It's the holiday season. Projected earnings per share. 2024 revenue and 2025 revenue for Williams-Sonoma was lower, but 14.56 for 2024, 14.72 for 2025. Now here's something. What Williams-Sonoma calls 2024 and what we call 2024 is a little different. So we are going to use 2025 for projected earnings going into this right here. 14.72 cents earnings per share projected for 2025. Price 195.25. Yield is 7.53. Your 10-year treasury right now, and actually I think it's lower today. I think I saw that the 10-year treasury is moving lower. First, I expect the 10-year treasury to kind of hold off a little bit and bounce around a little bit. We get non-farm payrolls on Friday. Things could get interesting. You could see the 10-year yield moving higher. Nonetheless, the 10-year yield is your benchmark investment. If you take on something outside of the 10-year, you want a little bit of premium if you're going to be taking on some risk. Given that, at 4.29 versus 7.53, that's a lot of premium. I've been covering a lot of these stocks lately, and this is one of the highest that I've seen in a minute. And it's sort of anomalous right now. As you can see, this is normal for price to earnings ratio. Coulda, shoulda, woulda. If you would have picked up WSM stock just a couple months ago, keep in mind what they call 2022 and 2023 and 2024 is a little different. But if you would have gone backwards a little bit, you'd be doing quite well. Let's take a look at the 4-hour or the weekly bar chart on WSM stock. Just over the summer, just a few months ago, if you would have picked up WSM stock at 120, first, as a stock trader, you're crushing it. Number two, your yield would have driven you to have gotten into that stock anyway. Because at 120, you already knew what the projections were. It was, WSM stock is just not trading rationally compared to the rest of the market. The rest of the market is overvalued. WSM stock is undervalued. Now, should you necessarily pull the trigger right now today? I wouldn't on all stocks across the board. And I'm not. I'm putting together a portfolio myself, but what I'm looking for is to see what kind of damage that the Federal Reserve is going to do to the economy with what they just did with interest rates. What if we see the stock market move much lower? a very distinct possibility. Again, we're going to be getting a lot of information over, say, the next 3 to 4 months with regard to the unemployment numbers. If they start to shoot up too much, then the Federal Reserve would be driven to lower interest rates. But all these companies, their revenues would decline. Therefore, valuations are going to have to adjust, which means the stock market is going to come down. WSM stock is a stock that traditionally is undervalued on a price to earnings ratio, but has a much higher yield. So if we see the economy and the stock market bottom out again in, say, 2024, WSM is one that you definitely want to keep tabs on and pull that trigger, because this is a high yielding stock relative to the benchmark investment. If this is the kind of breakdown for stock analysis you're looking for, make sure to hit the like and follow button. Again, the channel is growing quite rapidly at this point. I've only had it for about 2 months. I'm going to continue to update stocks like this, the broader stock market analysis. So if that is what you're looking for, hit that like and follow button. See you in the next video.